Well, good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. It's July and it's our final week of the month, and we're going to complete our month-long dive into all things legal and litigation within the mortgage industry. We've got a great guest today. Excited to get into the conversation with him here in just a minute. But before we do that, let's thank our sponsor over at Accelerate. Accelerate helps lenders close more loans through better borrower engagement. They do this through the industry's most innovative customer experience platform that delivers lead management, sales enablement, engagement, a robust mortgage-specific content library, and data intelligence, all in one comprehensive and highly scalable platform. Accelerate delivers dynamic technology, strategy, and content for every channel of your business to ensure engagement throughout the customer's journey, whether that be with your borrowers, your referral partners, or any other party to the loan transaction. The dynamic enterprise solution seamlessly fits into your tech stack, whether that's your phone integration, your POS, your LOS, servicing system, or data enrichment, due to the advanced API connectivity, modern design, and open architecture. So gone are the days of managing multiple and separate systems like your CRM, your marketing automation, lead management, and more, and having that data trapped in those silos. The innovative platform at Accelerate allows you to provide your internal and external customers timely, relevant information based on data intelligence to build repeatable outcomes at each stage of the customer's journey. So bottom line, close more loans, improve borrower conversions, enhance customer retention, transform your customer acquisition lifecycle, and create customers for life. So for more information, visit accelerate.com, or you can call them at the number listed in the description below. So let's jump into the conversation here. I'm excited to welcome in an old friend of the association, Artin Betpera. He is a shareholder at Buchalter. Artin has been involved with the association for a number of years. He actually was a graduate of our Future Leaders program a few years back, so happy to have him back in. Artin, welcome.
Great to be here, Dustin. It's great to connect. It's been a little while, so I enjoyed catching up with you a little bit before we hopped on to our official podcast. Thanks for having me.
Yeah. It's great to see you. So for those that maybe don't know you very well, let's start with your background. How'd you get involved in the industry? How'd you wind up as a litigator, and sort of what brought you to where you're at now?
So it's funny, when I first decided I want to be a lawyer, I didn't know that there was anything outside of being a litigator. I thought just being a lawyer was just about handling lawsuits and dealing with legal claims. Little did I know that there's also corporate lawyers, there's regulatory lawyers, and a whole panoply of different types of lawyers. But for me, I just really felt like I was hardwired to be a litigator, and which really at the end of the day, I think a lot of it has to do with solving hard problems and helping clients navigate through difficult situations in an adversarial environment. And you know, what I found was that it was something that I had some skill in helping my clients through difficult legal problems. And so that's how I really ultimately settled on being a litigator. Now, how I got involved in the mortgage industry sector was quite random, honestly. I was coming out of law school, looking for a job, and I happened to answer an ad. I think it was in the Daily Journal, looking for a 3 to 4 year lawyer. And I'm like, I have nowhere near the experience of a 3 to 4 year lawyer, but let's go ahead and apply and see what happens. As it turns out, the firm I applied with was a small shop representing subprime and hard money lenders. And I remember walking into that interview, and the head of the firm asked me, "Hey, like, so why do you want to get into mortgages?" And I remember I didn't really know what to say, but I looked out, and it was, you know, in this corporate tower overlooking all these buildings. So I pointed, like, look at all these buildings. All these buildings, they have mortgages on them, and this is, you know, this financial vehicle is what, you know, makes the world go around. And I don't know, I made something up, but bottom line, they ended up liking me and they hired me. And so when I started out, right, as a new lawyer, I was representing subprime and hard money lenders, and this was back in 2006. So by the time I started, maybe 3 or 4 months in, or so, we had the financial collapse. And so what I like to say is that my career was literally birthed into the financial crisis. And that really kind of set what I would later go on to do, which is a whole lot of different things touching the mortgage industry sector and having to do with litigation. You know, you have escrow and title issues. You have, default servicing issues, RESPA, TILA, TCPA, FCRA, the alphabet soup of consumer protection statutes are things that I have helped lenders, large and small, throughout the country deal with in my career. So it was very, very, I guess, serendipitous in a way how I just kind of fell into this. But I really, really have enjoyed my work and really take a lot of pride in providing good representation to this industry sector.
Yeah. Well, not surprising that how you got into the industry. I've yet to meet the person who, had their mind set on being a mortgage banking attorney, in high school or something, and then went to college to be a mortgage banking attorney. I've yet to meet that person. I don't know, they may be out there, but I've yet to meet them.
There's so much in there though for me I'm a bit of a law geek, and there's just a lot in there for me to sink my teeth into from so many different angles. And as I got involved with organizations like the CMBA and met more and more people in the industry, I just really took a liking to folks that work, because at the end of the day, my clients aren't big amorphous entities. They're people. They're run by people. They're staffed by people. And so for me, it's really about the people, which is really where I feel like I have a great affinity to when it comes to mortgage banking.
Absolutely. Well, I think that especially the IMB world, which is kind of the heart and soul of the mortgage banking world, that is definitely not what I think a lot of people who are outside the industry think of when they think of banks and mortgage and finance. Because to your point, it is a lot of small businesses or medium-sized businesses that are run by people who have built it themselves, and the passion they have for mortgages and lending in the housing is, without compare, I think, in the financial world, the passion they have. So I think but to that point though, I wanted to sort of delve into this here. How did going through the financial crisis, how did that prepare you for this last year? I think that it's very interesting. People who've gone through both crises, now I like to ask them that question, but I think you in particular, having just come into the industry, like you said, kind of birthed into the industry in that time period. How in the world did that prepare you for 2020?
I think the one thing it really taught me was the importance of resilience, because just given the nature of the client base of the first firm I worked with, unfortunately I lost my job before I even completed my first year of practice. And that was a hard thing as a first year lawyer to be like, all right, so I guess I have a couple of months of experience under my belt. I have to now go out and market myself and find a new job amidst a pretty quickly deteriorating job market. But I was, very fortunate to land at a regional firm where I spent probably the next 7 years of my practice, pivoting from different things that touch either mortgages or real estate. But I think the key thing it really forced me to do was to be resilient. So when you have those lessons going through the first financial crisis, it's kind of funny because a lot of the litigation that spawned from that financial crisis is litigation I have handled throughout the years. And I remember times when the wave of litigation, it just seemed like a never-ending tidal wave of lawsuits. And I remember thinking to myself, maybe about a year and a half ago before COVID, I think we're finally through litigating all this legacy stuff from the last financial crisis. And once as soon as I have my thought, I'm not, I'm taking no responsibility for, causing the next crisis in my mind.
You jinxed.
Right, exactly. It is the next crisis hits, and really a lot of the lessons I learned from the first time around applied just as equally in terms of really being resilient and being adaptable and really learning to to navigate through troubled waters.
Do you think that gave you some perspective too, as far as, I think that I can't imagine coming into the industry at the beginning of either crisis and sort of being, hit with that wave of whether you're an attorney in the industry or anybody in the industry, and just kind of thinking, is this the end? You'd have to think, is this the end of our industry? And having gone through one of those, I think it must give you some perspective that, okay, this too shall pass. We've been through one of these before. We've been through crisis before, and we've come out on the other side. So, do you think that's kind of giving you that perspective as well?
Yeah, absolutely. I think, and you saw in terms of the resiliency I'm describing, like personally, I think you saw that a lot from the folks that came out on the other side and achieved success in the wake of what was really in 2008 a devastating financial crisis. And things played out a lot differently when it came to the mortgage industry this time around. You essentially saw, particularly for instance, when it came to refinances or even purchase money because of a really hot housing market, you saw things going in a bit of an opposite direction than you did in 2008. In other words, we didn't have that big cliff fall off. Although we were dealing with a lot of different types of adversity during the time, it was unique from what was experienced in 2008, albeit it was a crisis nonetheless. So it was interesting to kind of see how things folded. I think a lot of the things that at least I had assumed when the crisis first started to foment in early 2020 didn't really come to bear at all. You saw the housing market go white hot. You saw, a huge activity in refinances because of low interest rates. So, definitely it took on a different facade than the first time around.
So Artin, looking forward here now, what I know that one of your areas of focus in your practice is on TCPA issues. So whether that, or is there another issue that you're keeping an eye on right now as far as trends that everyone else should be watching in this year and in 2022?
Yeah, I mean, I'll address the TCPA. I think the interesting thing that myself and a lot of other practitioners in the space have been talking about, particularly when it comes to institutional clientele, is the litigation volume right now. It seems as though, and whether it's because of government stimulus or otherwise, there is not as much activity in filings as we saw, say, for instance, in the wake of the 2008 financial crisis. That may perhaps be because we're just damming things up, and that there will eventually be some kind of reckoning as defaulted and bad debt reworks its way out of the system. But that's been one of the most interesting dynamics to kind of monitor, is to see the volumes of litigations against different types of entities, whether it's large institutions or smaller lenders in the lending space, and trying to predict exactly how this is all going to play out. It's really, really, quite honestly, for me, tough to say what's ultimately going to end up happening, because a lot of this, I think, is going to be influenced by what the government's doing, and different sorts of financial stimulus and other policies and things like that, and how those all end up working out at the end of the day.
Well, to that point, I think that there is going to be an increase, maybe large or small, in filings with the changeover in administrations. We've got a new CFPB coming, and a sort of a new, I'm sure, more aggressive approach at the at least at the federal level than we had during the Trump years.
Yeah, I think you are going to see a lot more regulatory action. Definitely. I mean, we've had a change of guard in the administration. You're going to have a beefed up CFPB, amongst other agencies that are going to be looking to be, whether you want to describe it as heavy-handed or more active in enforcement, both on the federal and state levels. I think we can all safely say that there is going to be an upswing in that sort of activity. Now, in terms of private litigation, obviously a lot of that's going to be a function of the actual operations and activity, and what level that's at. So in terms of pre-foreclosure activity or debt collection activity and things like that, those are really going to be dictated by how much action there is in that space. And it seems like things have been a little bit muted, through COVID. But it could be that once we get past this, era, and things get back to normal in terms of collecting on debts and working out on defaulted debts, that you're going to see an increase in private litigation activity as well.
Makes sense. So, are there any big cases that you're keeping your eye on right now that are kind of moving through the courts, or anything specific that lenders should be watching out for? Maybe if I'm an in-house attorney, what's the big case I should be watching right now?
Yeah, I mean, it's hard to answer that question. I think there's just quite a lot going on, but let me answer it in the context of one of my specialties, which is the Telephone Consumer Protection Act. So this is a statute, for anyone who has a telephone and reaches out to borrowers, whether it be for origination purposes or servicing purposes, they're going to know about, right? It regulates, automatic telephone dialing systems and the use of pre-recorded calls. It regulates text messages. It regulates calling folks on the National Do Not Call Registry. So there's been quite a lot of activity in that statute, starting earlier this year with a big case out of the Supreme Court called Facebook versus Duguid. And that was really what a lot of us were hoping was it was going to resolve a really hot debate over the interpretation of the statutory definition of an automatic telephone dialing system. But what the Supreme Court ended up doing is that they very narrowly interpreted that term and said that, you know, you can essentially, and I'm paraphrasing here, that an ATDS is only a device that can, you know, somehow uses, whether it's by storing or producing, a random or sequential number generator. And so it really kind of it did away with a lot of, you know, both expansive FCC interpretations and interpretations by other circuit courts like the Ninth Circuit and the Sixth Circuit and the Second Circuit that took a really broad view of what type of devices fell within that definition. And so, you know, the expectation was that maybe it was game over for the TCPA, but we've seen some kind of cracks emerge in the Supreme Court's opinion and what some plaintiffs' lawyers are really trying to do by capitalizing on like a little footnote in the decision talking about how, a device that randomly sequentially dials from a pre-produced list could qualify. Anyways, the long story short, without really getting into the boring details of that all, is that it's given plaintiffs' counsel the opening to try to argue to courts that actually Facebook shouldn't preclude them from suing lenders and other entities that use auto dialers for violating the statute by using an automatic telephone dialing system. So far, I would say the track record is pretty good in favor of the defendants. There's been about 3 different decisions that have addressed this argument, all of which has come out in the favor of defendants. And so I think the bottom line is that given a lot of the uncertainty in litigation, the advice I most frequently give to my clients is that when it comes to Facebook, when it comes to compliance with the TCPA, more or less keep doing what you were doing, particularly if doing what you were doing involved just your block and tackle compliance strategies, right? You want to make sure you have the right type of consent. You want to make sure you're honoring consumer requests to stop calls and revoking consent. And I think really the benefit of Facebook is that it just lowers the temperature of the risk when it comes to using automated technologies to call borrowers, right? I think the other thing that it's done is that it's really heightened the risk of other types of technology that's used, like pre-recorded messages, for instance. So plaintiffs' lawyers, they have a lot easier of a shot when it comes to suing for pre-recorded messages because the Supreme Court's case in Facebook really didn't touch that particular technology that's regulated by the TCPA. So from a litigator's perspective, I think we've seen a lot of very positive developments when it comes to the Telephone Consumer Protection Act. But from a compliance perspective, I think it's really it should continue to be business as usual when it comes to just those basic block and tackle compliance strategies.
So on Facebook, I'm curious, you mentioned that the court ruled sort of narrowly in that case. Do you think that there's going to be an opportunity in the near to intermediate future where they readdress TCPA at all?
So I'm not really sure. You heard some noise out of Congress following Facebook that they were going to do something in response. We haven't really seen much of anything yet. The place where I think we're going to see the most activity is going to be with states. And I think one of the biggest kind of topics when it comes to robocalling regulation has been Florida's new telemarketing statute. Now, this statute was recently passed. It became effective at the beginning of this month. And I've actually been helping a lot of clients navigate exactly what they need to do to stay in compliance with the Florida statute, because Florida is a huge market. There's a lot of loan origination activity going on there, and so there's been a lot of questions arising out of what do we do in response to the Florida statute. And again, I think by and large, the key to a lot of compliance is going to be simply ensuring that you're getting the proper consent from the people that you're calling, and when a consumer tells you to stop calls, you stop calls. I think Florida's law was written more broadly, so I think it presents a lot of risk. So if there's any originators out there, and again, I'm singling out originators because the law is primarily focused on telephone sales calls, not your kind of debt collection type calls. And so if there's mortgage originators out there, if you're calling borrowers located or potential borrowers located out in Florida, that's something you really should pay attention to, and kind of take a moment to review that statute, consult with experienced counsel, and make sure that you're moving forward in compliance with that law, because we're already seeing lawsuits crop up in Florida suing for violations of that new law.
So do you think that talking to your clients that do business in Florida, are you seeing that, are they building their entire compliance system around Florida now, or are they kind of seeing this as a one-off, and they're essentially having dual systems set up with everybody else and then Florida?
So not really, just because sometimes it's really hard to kind of parse out things on a state-by-state level. You have interesting questions crop up, particularly in terms of, well, if I have a Florida area code, but the borrower seems to be located out of state, how do I treat that, right? So there's these nuanced questions that come up, and oftentimes, kind of a one-size-fits-all approach is usually the safest way. And again, we're not talking about necessarily anything that is going to be unusual. I know a lot of my clients and a lot of lenders in the space are already adhering to protocols where they are, for example, ensuring that they have prior express written consent before they call anyone, where they have an internal do not call list and they honor requests to stop calls. I think so long as you're doing that you have that baseline established, that you're already doing a lot to mitigate your risk out in Florida. I think the thing that is of concern is that now there's a private right of action in Florida. Now you can get private lawsuits in Florida and class actions in Florida dealing with these sorts of violations. So really, outside of these risk mitigation measures that you ought to be taking, it just presents a new level of risk, because now you can get sued out in Florida for non-compliance, which makes kind of ensuring compliance that much more important.
Right. I know that makes sense. So, I mean, and maybe you answered this, but maybe looking beyond TCPA issues and the Florida issue, what's the most, if I'm a in-house compliance or in-house counsel, what's the most underestimated litigation threat to me and my company from your perspective?
I think it's difficult to really pinpoint one exact thing, right, to answer that question. And I'm not answering, I'm giving you a bit of a non-answer here, but it's really, there's so many, an amalgamation of different risks, given how many different places a lender's operations, whether it's on the origination side or on the servicing sides, intersect with different types of laws, right? You can take Fair Credit Reporting Act as one example of where you're seeing a lot of different litigation activity, whether it's due to reporting issues, whether it's due to identity theft issues or mixed filed issues. There's a lot of activity. That's another statute where that there is implications in the mortgage lending industry, and that is leading to quite a bit of activity when it comes to litigation. But I would say that really, from a more holistic perspective, I think it really is helpful to focus on having a culture of compliance, right? Where you're taking your obligations seriously, where you have robust, what I call infrastructure, in order to comply with all these different types of laws. And I know, particularly in dealing with a lot, I know particularly in conversing with a lot of different in-house counsel, it's a very challenging task. But I think from a holistic perspective, if companies can have more, oh, my lights went on, must stop you moving. There we go. But I think from a holistic perspective, if companies just really maintain a culture of compliance, that is very helpful in terms of trying to keep your organization out of harm's way.
Right. No, and I agree. And I think the culture of compliance, I think that makes a lot of sense. I think it's important the way you put that. I think it really does have to be something that's that everyone at the company buys into, particularly on the compliance side and in the C-suite as well. So I guess if I'm again back putting myself in the shoes of in-house counsel or compliance, and I'm listening to this, and I'm running right back to my team, and I say, okay, yes, we need to build a culture of compliance. Yes, that's something that we can work on long term. But here's the one thing I've got to do right now. Here's what we've got to do right now that Artin Betpera says that he's seeing that is a big issue out there and people just aren't paying enough attention to. What's the one practical thing I can do right now?
So Dustin, I think the one thing, at least from my vantage point, and particularly doing a lot of work in the robocalling space, is that the Florida law is a great opportunity for in-house counsel to take a step back and make sure that their policies and procedure and operations are in alignment with what the requirements under the Florida statutes are. And this is, again, particularly when it comes to mortgage origination operations, where you're either calling leads out in Florida or generating your own leads, going back and making sure that you have right time zone restrictions, you have proper consents, and that you're not, just simply relying on something that might be kind of some outdated compliance strategies. Because the key thing is here is Florida is likely not the last state to step in and pass more onerous regulations when it comes to not just automated dialing, but making any sort of call for telephone solicitation or telephone sales purposes, regardless of the type of technology that you use. So from my vantage point and seeing what I'm seeing in terms of the legal developments when it comes to telephone sales, I would say that's the one thing take back. It's a great thing to kind of drill down into and take a closer look at.
Good. I think that's good advice, especially because you point out, I mean, in sort of the same way that when new laws are passed in California, they tend to spread across the country. Same thing in Florida. It sounds like this won't be the last place we'll see that tightening up the issue there, or tightening up the rules there.
Yeah, so, and interesting enough, you usually see these things coming out of like California or something like that. It's rare to say that Florida is leading the way in terms of a state that's imposing heightened restrictions on businesses, but it's a weird time, man.
Yeah, who knows? Well, don't give California any ideas. We'll, I'm sure our legislators will get right back on that. So we've got time for one more question here. And I know that you've been a big supporter, like I said at the beginning, of the California MBA for a number of years. So from your perspective, if you're talking to someone who's not a member, what's your pitch to them? What would you say? Why are you a member of the California MBA? Why have you been a member, even as your career has progressed over the years and you've changed firms? What has kept you engaged with the California MBA?
Yeah, so the California MBA actually was one of the first industries trade associations I ever became involved in. And I'm fairly certain one of the first conferences I'd ever attended as a young lawyer. And I remember, and those are, I can make my way around to conference rooms after, conferences after many years of experience. I remember the first one I went to, I was standing around like, I don't even know what to do with myself right now. I don't know anyone or anything or what I'm doing. But I remember meeting you, Dustin, and Susan, and you guys showed such a tremendous level of support for myself, encouraging me to join future leaders, and really just being great friends throughout several years of knowing each other. And I think that, kind of going back to one of the original things I said, for me, a lot of it comes down to the people and the relationships that I'm able to build through my career. It's one of the most fulfilling aspects of my career, and it's what keeps me going. And so when it comes to the people, the CMBA has great people, both in terms of the folks who are running it and the folks who are members. And I'm proud to say that many of the members of this organizations are either my clients or the clients of my firm, which, by the way, has traditionally been very, very involved in the CMBA as a firm, and just has a really great, robust team that can help service so many different facets of what a mortgage lender, originator, or servicer might run into when it comes to legal compliance and legal risk. I think it's a great way to keep plugged into the industry. And really, I think it engages a lot of great advocacy. One of my favorite events is Legislative Day. I remember the first one I ever went to was like taking an adult field trip for me. I was like giddy from it, because we got to go in, we got to sit face to face with legislators, and we got to advocate in real time on behalf of the industry. And I thought that was such a great, one of the really unique things that the CMBA helps set up year after year. And that really is a hallmark of the type of service that the organization provides. And it's always been a great event. I'm looking forward to the next time, hopefully, maybe next year, when we're able to do that in person and come up and meet with, the folks that are making decisions up at the Capitol, and to really show them, like, look, we're not just some big bad industry, or it's real people, offering real good products and with voices that should be heard.
Yeah, Well, Artin, I couldn't have said that any better. And I second you when you say, talk about having a legislative day back in person again. We are definitely looking forward to doing that again in the spring of 2022. So, hey, thanks again for joining us, Artin. It's great to see you again. Great to hear your voice, see your face, and hopefully we'll see you at one of our conferences later this year, or at least at legislative day next spring. Thanks for joining us.
Thank you so much for having me, Dustin.
Yeah. And if you enjoyed the conversation, make sure and subscribe to us here on our YouTube channel. You can also find us on SoundCloud, Spotify, and Apple Podcasts. And we'll be back again next week for another episode of Connect. See you then.